Today was another painful day for us semiconductor and AI tech investors. And on today's episode, I actually want to take a closer look at a few companies that I'm pretty excited about and just look at some recent updates impacting the overall industry. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right. So first, I want to take a closer look at CoreWeave, and at the end of this episode, I'm also going to showcase some of the price points that I'm willing to that I look at when looking at CoreWeave right here. But right now, the stock is down roughly 6.5% on the day, sitting at $106. In the past 5 days, the stock is down nearly 20%. This is reporting earnings next week, so I believe volatility will continue. Year to date, the stock is still doing great at 167% up. Now, for me, my heavy cost basis of this was in the mid to high 90s. So I'm still a little bit green. And right now we are definitely looking into the accumulation phase for adding more CoreWeave. And I'll talk a little bit more about some of the price points in a bit. Now, what made me super excited about today in CoreWeave was Semi-Analysis dropped their new Cluster Max rating. So for those that are not familiar with Semi-Analysis, this is a huge semiconductor research firm, a lot of engineers working there, and they work with a lot of the research that they provide is actually meant for the big players, and the big players use them because they respect the type of information that they provide. Now, unfortunately, the information that they provide typically is outside the price points for most us retail investors. But one thing they did show was the rating CoreWeave. CoreWeave is still the only cloud provider that they follow, and they follow a huge list here of being a platinum star or platinum rating. And I think that showcases how CoreWeave is doing amazing in this AI infrastructure GPU cloud race. And it's even doing better than a lot of the big players, right? There's no one there. Then you see gold. Gold, you also have Nebius, you have Oracle, and you have Microsoft. And if you look at silver, that's where you have a lot of the other hyperscale players. You have Google Cloud and you have AWS. So Amazon, so the big four are within the gold and the silver. The only one there is CoreWeave. And they kind of showcase in their press release, they have a newsletter, how they go about the rating, but there's so many different things from reliability, from security, from storage, from this, just the list goes on and on. And CoreWeave is the only one able to do that. So that gets me pretty excited because right now, the overall market is seeing right now is a market where everybody's winning, right? It's a market where even those cloud service providers that might not be that good are winning because you are so power constrained and so compute constrained. But what happens when those things start to dwindle away? I'm not saying it's happening anytime soon, but when it starts to dwindle away, who are the people going to go after? They're going to go for the best out there. And I think that gives me a great excitement for those in the top spot, like CoreWeave, like Nebius. So that was pretty interesting. And I believe eventually the market is going to catch on with how well CoreWeave is compared to some of the other players. And right now, sitting at a market cap of $52 billion, I personally believe this is a multi-bagger closer to 200 billion in the next 5 years, as long as this AI market continues to evolve. Now, before we continue, I have created a community for AI and semiconductor investors. I do daily deep dives during the weekdays. I talk about earnings and so much more. It is a research community. And if you want to join right now, we hit 100 members. We did. So the founding member offer is coming offline Sunday night. After Sunday night, it is gone. This is going to be the best offer you get, 50% off your annual subscription. I promise this is the cheapest it will ever be. No one's going to get this offer again. And I'm not stopping. I'm grinding my way here. So check it out if you're curious about the AI and semiconductor market. Like I said, this is going to be the cheapest offer. So definitely check that out. Now, talking about the AI market, Sam Altman posted a few things today. And there's been a lot of questions and a lot of discussions happening about OpenAI, how they're going to fund money. They talked about maybe getting governments to guarantee some of their loans and stuff like that. And Sam Altman wanted to clarify a few things. Now, I find it interesting how the market is, right? No matter what anybody does, you can always judge it either way. If you're an AI bull or of whatnot or an open AI bull, you look at this and you say, look, this is actually pretty great. If you are an AI bear, you look at this and say, this sounds kind of desperate. Who goes out there and types 3 pages long tweet? It's just trying to cope for something. So it's interesting to see that that's just how the world is, right? I mean, no matter what happens or what gets posted, there's always opposition viewpoints, and those viewpoints are going to read the same thing and come up with different answers. And I want to highlight some of the things that I found pretty interesting. So Sam Altman first says that he doesn't have or want government guarantees for open AI data centers. He believes that this is a capitalist world, and if you fail, you fail. But no one should be making sure your business succeeds. Now, one thing that he does believe the government should make is they should build a strategic national reserve of computing power, and it says it makes a lot of sense. But this should be for the government's benefit, not the benefit of private companies. So in the future, I mean, if AI is really as crazy as we all think it is, it makes sense for each nation to build up their own sovereign AI and sovereign computing capacity. It's going to be another strength of player. Hey, I have the most AI company. I This is what makes me one of the top countries all over the world. Now, Jensen, Nvidia CEO, has definitely talked about this in the past that every nation should do this, right? Having your own AI and having your own compute is very crucial, not just for national security, but the kind of innovation allowed within your country. Now, the next thing that I thought was pretty interesting, he wanted to talk a little bit about how OpenAI is going to pay for all this infrastructure, because that's a big question. Now, they mentioned that by the end of this year, they expect to be above $20 billion in annualized revenue run rate and grow to hundreds of billions by 2030. That 20 billion is actually pretty damn impressive. They right now are looking at commitments about $1.4 trillion over the next 8 years. Obviously, this requires continued growth, and each doubling is a lot of work. And that's something that many people don't really keep in mind. They just see this $1.4 trillion and say, how are they going to do this? How are they going to pay $1.4 trillion? Well, let's say they're using all that $20 billion in revenue in capital in compute. All right. So this year they pay $20 billion. Next year, let's say they double. They expect to do more than that. But let's say next year they double, they do 40 billion. Right. And then the year after that, let's say they double again, 80 billion. And it goes on and goes on and goes on. It paints a closer picture of how to get to that 1.4 trillion over the next 8 years. Now, one thing in the AI market is there's so many new solutions that are going to help grow this revenue. Upcoming enterprise offerings, new consumer devices, robotics industry, new categories that they have hard time putting specifics on, like AI that can do scientific discovery. All that is going to need more and more compute that they will gladly be able to sell. And that sell will help grow those revenues to those double digits or double in theory, every year or so for the foreseeable future. Now, looking at ways to more directly sell compute capacity is something that they're also trying to do to other companies and people. And this is actually interesting, right? I wonder what they're trying to do here. Are they trying to become a cloud player by doing this, or do they mean selling compute capacity in forms of AI token? So that will be uniquely interesting. But if you do have all these GPUs available to you and you have all these massive data centers, and Sam Altman, right? We did see that deal with Nvidia, where Nvidia mentions that now OpenAI wants to buy directly their own AI GPUs. It showcases that they want to have that infrastructure. They want to have that asset. They want to be able to use that asset, or worst case, sell that asset other way. Now, they see that the overall world, everything that they are seeing and everything that suggests they need a lot more computing power than they are already planning. The world needs more computing power than what they're currently planning. So while they're saying they're going crazy, it's not crazy enough. Now, the other things is these massive infrastructure projects take quite a while to build. So you have to start now, right? Some of these massive data centers could take 2 to 3 years. And if you're projecting this revenue growth and this type of needs in the AI market, you're not going to wait till then to start building. You need to start building now. And at the end of the day, not only OpenAI, but a lot of other CEOs have said the same thing, where they believe the risk is not having enough compute is more significant and more likely than the risk of having too much. So that's the biggest risk for the growth of a lot of these AIs is just not having that compute capacity. Having too much is not necessarily the worst thing because you can find other use cases for those GPUs. And right now, they still have to rate limit their products. They still don't offer new features and models because they are severely compute constrained. So, I mean, as a AI bull, I found this pretty exciting. And obviously, some may say, Jose, you're always just getting excited when OpenAI says something, but there's only a limited amount of companies that can talk truly about the AI market. OpenAI, Claude recently says that they're continuing to see massive revenue growth, and that's why they made those massive partnerships with Google, with Amazon, right? So it's not that I'm only focusing on certain players. It's just that there's only certain players to focus on. And it might seem like you're only looking at a bias, but if those are the only ones that can give you the information, isn't that the only place you're going to look? Now, overall, this gets me pretty excited for a few companies. Obviously, CoreWeave, because CoreWeave has that overall AI cloud capacity. We saw them being a platinum rated player here. To me, that is a good indication of the potential for CoreWeave. If you are the best, you're going to win. Now, before we go, the next topic I want to take a closer look at is IREN. So, IREN just reported earnings. The stock is up roughly 2.3% after hours. I will be doing a deep dive today on this one for my community members. But the stock has done amazing. Now, what I really wanted to talk about this is more data showcasing this needs for AI capacity. They just announced 140,000 GPU expansion. I think the last time I saw them was 100,000. So they're buying even more and more GPUs because they're seeing that demand. That is intense. Now, I don't own IREN. I have no intentions of buying right now, but overall, the excitement of the AI industry is pretty much there. And this brings me back to my favorite player, Nvidia, right? Nvidia is right now sitting at $188, market cap of $4.5 trillion. The stock is down from hitting those $5 trillion mark. And I've done a few videos. I've done a video in the past where I talked about potential earnings per share for next fiscal year. And I believe this stock is trading at some attractive levels. Now, let's look at overall forward PE ratios. So this is the next 12 months. The company right now is trading at roughly 32.45. The median for the past 6 years or so has been around 34.24. So right now it's trading a little bit undervalued compared to its median. Now, I actually believe because these are based on analyst expectations, the actual forward PE ratio for NVIDIA is lower based on my estimates. I'm going to guess it's closer to the 30s, maybe the high 20s. And to me, that looks pretty exciting, especially with what we're hearing right now. Now, I am going to showcase some of my buying points. Now, it's really interesting how I do. I don't have a specific time to buy. I like to average in or always put money into the market. And it's either put a little bit of money into the stock, put medium amount of money into the stock, or put a lot of money into the stock, right? As much as I can and as much as I can average over time. Now, for me, and it might be different for everybody else, from anywhere where we're at right now to about $183 is that red mark. This is where I wouldn't mind doing a little bit of adding over time. Now, the closer you get to the different colors, the little bit more aggressive I tend to be here in the yellow. And remember, this is me because NVIDIA is a massive position in my portfolio. I get to be very, very patient. Under 183, it starts to get pretty fun, a little bit more aggressive. And then to me, again, we may never ever hit these price points, but under 155 in the mid 150s, that's when I start to go extremely heavy. And again, it's not a set mark. it has to be fluid, right? As we get closer, it increases my overall excitement, and I'm even more and more excited for that. Now, I also want to show CoreWeave because I know many people follow me for CoreWeave. Now, these are my thoughts. If you looked at previous charts, nothing here has changed. So for CoreWeave, anything over 115 is just small dollar cost average. Now we're getting closer to that 100 price points. That is, to me, extensive adding into the stock. So we're around there right now. We are 106. I'm never, and the reason I say this because I'm never just going to wait for that moment of 100. If we get to 102, 103, I become a little bit more aggressive. This is just more a range of what I'm looking at. But for me, anything under 100 is extreme buying opportunity for me because, like I mentioned, I do believe this is a $200 billion company coming into the AI cloud space. And in the next 2 to 3 years, I'm going to be happy about this one. So I hope you guys enjoyed today's episode. If you have any thoughts, let me know in the comments below.